Good afternoon, everyone. Thank you for your patience while I get my presentation open to give you all a quick overview into who it is that we are and what we're doing here today. Our apologies again for missing you last week. We had some scheduling conflicts, but we are excited to welcome you back this week. Mike and GB always have something fun up their sleeves, so I'm looking forward to today's presentation. Good afternoon, Mike.
Good afternoon, Lauren, and good afternoon, everybody.
So I'm gonna go ahead, I think, and well, there are still people coming into the room, but I'll go ahead and get the intro out the way and then you can get started, Mike.
Sounds good.
Here we go. All righty. So again, good afternoon, everyone. My name is Lauren Simpson, and I'm with the Whoa, that went too quick. I'm with the SBDC. We're a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. And they're at no cost to you because your tax dollars have already taken care of our fees. So be sure to partake in our free resources. Now it doesn't want to advance. Gotta love technology, everyone. There we go. How about we start this over again? I'm gonna stop my screen share and get my technology together. I'm sorry, everyone. Thank you for bearing with me. Thanks, Mike.
Sure.
All right.
There we
go.
So
let's start it over. So again, my name is Lauren Simpson. I'm with the SBDC. We are a national program with over 1,000 locations throughout the country. And we offer no-cost services to local small businesses. Now, our services are at no cost to you because your tax dollars have already taken care of our fees. So be sure to partake in our free resources. For the Los Angeles network, which is the network that I represent, we have locations throughout and we serve the counties of Los Angeles, Santa Barbara, and Ventura. So if you are within the Los Angeles, Santa Barbara, and Ventura counties, be sure to take a look at the map in front of you and you can see where our center locations are. And so you're able to get connected with someone who's part of our team. You'll want to do so because we offer no-cost business advising. And so you're able to sit one-on-one with one of our business experts. You can sit with Mike and he can go over, I mean, he knows a ton of things. So everything from taxes and finances to licensing and permitting, business planning, you name it, we've got it. And then we also offer virtual trainings, much like the training you've joined today. So as you can see on the screen, we're here to help. Be sure to get in contact with us so that we can get you started. And then for those who are in the Los Angeles area, if you'd like to reach us by phone, go to 866-588-7232. If you would rather reach out to us online, go to smallbizla.org/new client. Now, for those of you who have reached us outside of our service areas, so if you are outside of Santa Barbara, Ventura, and the Los Angeles counties, please go to americassbdc.org/find your SBDC. I'm going to do a quick stop on my screen share. Quick housekeeping, please put all questions into the Q&A. Again, questions into the Q&A. Let's be sure that those questions are on topic. We want to be sure that Mike is able to continue his presentation without being thrown off track. So please keep all questions on topic. We will reserve the chat for any links or quick bits of information that Mike would like to share with you. And if you guys have any comments related to the presentation, you can put those there. With that, Mike, I'm going to hand it over to you.
Thank you, and welcome back, everybody. Lauren, could you please inform everybody how they can get a copy or a recording of the presentation?
Yes, of course. So for those of you who are looking to go back and view any of our previous recordings, I am going to be dropping a YouTube link into the chat and you can check them all out there. You can also have access to other programming that we provided. Now, bear with us. We are still building that channel. We have various playlists that will be coming online. But yeah, that's how you can. And if there's anything specific, if you have any questions, please be sure to shoot me an email and I'll be sure to get you connected with who can best help you. Thank you.
Thank you. So today I'm going to be going over some crowdfunding, a crowdfunding presentation. I work out of multiple SBDCs, El Camino College, Long Beach City College, and one or two others. At El Camino College, which is the southbaysbdc.org site that you see on the screen, we have a 2-day crowdfunding webinar. Goes on for a couple of hours. I'm going to be taking you through one of the presentations on crowdfunding. And please keep the questions on topic. That'd be helpful. So with that, I'm going to go ahead and share my screen. I apologize, my voice might be a little hoarse because I've been talking hour after hour after hour for weeks on end. So I apologize if my voice is hoarse. There is one question I want to address that Ray put in regarding EIDL. I'm not sure that I can answer that question, Ray. I think the best thing for you to do is to make an appointment with an SBDC advisor to go over your specific question. Okay, so with that, we're going to start with crowdfunding. Now, crowdfunding came into its own maybe about 10 years ago. And this presentation is being put on by my colleague, Debbie Gofundme and I. So let's go back to the history. It has its origins back in 1997. It basically is an online money raising strategy. Maybe some of you have contributed to crowdfunding campaigns. Maybe some of you have run crowdfunding campaigns, but I want to take a little deeper dive than what you normally have been through. Kickstarter and Indiegogo, they're the ones that started it off. It came about in 2008, 2009, and has become really popular for a lot of different industries, in particular artists, filmmakers, and entrepreneurs. It makes it a lot easier to raise money rather than trying to go through a traditional VC or private equity angels. We know all the angel groups. We know the VCs. We know how hard it is to get money through those groups and through those individuals. So if you're in a situation where you have a new product or service, or you want to take a loan or something like that, one of the best ways to do it now is through crowdfunding. So you can see here, 12.27 billion was raised worldwide. I believe that's going to triple. So it's going to double by 2027. You can see the graphic here. It's going to be about 26 billion by 2027. There's over 2,000 crowdfunding platforms. Top 3 countries are US, UK, and France. 40% of the crowdfunding is for business, 20% for social causes, and 40% for other. Fewer than a quarter are successful. That's a key point. The average raise is 5,270. Now that's across all industries for all campaigns. There are some campaigns that raise millions of dollars. The average dollars donated is 134, and the average donate is 24 to 35. Keep that in mind. If you have a video and you do a crowdfunding campaign, you're likely to raise more money and be more successful. And campaigns with ongoing updates also raise more. The average length of a campaign is 9 weeks, 3 weeks of preparation. So you can see the graphic on Kickstarter and Indiegogo. On Kickstarter, the average raise is $23,000 with over 71 million donations, 520,000 Kickstarter projects, about a 39% success rate, and over 9 million campaign backers. Indiegogo has about 9 million campaign backers. 19,000 campaigns launched per month. It's 800,000 Indiegogo projects and a 13% success rate. So look at those success rates if you plan to go ahead and engage in a crowdfunding campaign. Let me continue on from there. So traditional funding will normally come from friends and family, maybe a loan, maybe credit cards, maybe home equity line of credit, those types of traditional means of obtaining funding. But if you do not have friends and family that can give you thousands of dollars, if you do not have a good credit score, if you do not have collateral, if the conditions of the business of the industry don't meet what some would perceive to be appropriate, this is an alternative to raise money for your business. So what is it? You're basically raising small amounts of money through a very large crowd of people. Now, I've come up with these terms: crowd gifting, crowd lending, crowd selling, and crowd raises. The traditional terms for gifting is donations, donation-based websites. For crowd lending, it's debt-based websites. For crowd selling, it's rewards-based websites, platforms. And for crowd raise, it's an investment. They're selling a piece of your company. Due to the Internet of Things and the emphasis of startups, investment crowdfunding has risen in popularity. That's absolutely true. There's many, many platforms when you can go out there like Gofundme and raise money for your business by selling a piece of your business. So let's take a look at traditional funding versus crowdfunding. When you have a bank loan, you invest capital for current customers, and you're going to have a good credit score. You have to have collateral. Those of you who have been to banks understand what I'm talking about here. It's not a fun process. For a startup, you need to have a resume. You need to have a business plan. There's all sorts of hoops you have to jump through, and you have to have 20% down at a minimum, etc. It makes it difficult to jump those hoops if you don't have that all in place. The time frame is long because there's a bank process involved in working through all of the information they need to get the loan, and securing a large loan is unlikely. Now with VCs, well, the problem with that is it's very competitive. There are VC staffers that will review 100 to 200 pitches a week. The likelihood of you being snagged by a VC is quite low. Angels, there's angel groups galore. There's Pasadena Angels, there's Tech Coast Angels. I'm on one wall. There's Keiretsu, there's the Monday Club. The problem is it's still competitive. So unless you rise to the top, it's going to be very, very difficult to get the money. You can see the success rates, 10 to 12% for angel investing. Crowdfunding, look at the success rate, 33%. This is why crowdfunding has come aboard. If you haven't engaged in it and you need money, it's something you might want to consider. So here are the four model choices again: donation-based, what I call crowd gifting; reward-based, what I call crowd selling; lending-based, what I call crowd lending; and equity-based, which I call crowd raises. All of the platforms, over 2,000 platforms, fall into one of these categories. A few of them do both, okay? So before you engage in a campaign, you have to understand what type of model that you want. So the major platforms are listed below on this graphic. We have Gofundme, Fundly, and Crowdfunder for donation-based platforms, crowd gifting. And then you have Kickstarter, Indiegogo, and Gofundme does have a rewards-based platform for businesses. And then lending-based, there's crowd lending through Kiva, and there's peer-to-peer lending through places like Prosper and Lending Club. And then for equity-based, the Seed Invest, Republic, Fundable, Gofundme, Start Engine, and a half a dozen more that I can list off. So those are the four models, and these are the major platforms. So how does this work? It's an iterative process. First, if you want to go to a crowd selling campaign through Indiegogo and Kickstarter, it's a selling platform, right? You come up with an idea and you're going to give rewards and you're selling your product basically. Now the rewards are a discount against what you decide is your MSRP, okay? If you want to go to debt equity, that's fine. And you might go to a bank for debt equity. If you go to equity, pure equity, then you're going to be going to a VC or angel group or bringing a private investor. And then it's institutional money through, let's say, Series B, Series C rounds with equity investors. So when you engage in a crowdfunding campaign, keep in mind that you're developing traction and you're proving the marketplace. And by proving the marketplace, that makes you, let's say, more legitimate in the eyes of those who might want to be interested in loaning you money, or those who might be investing in your business. So here's the concept. You present your ideas, your product, your services to the public. The public funds your campaign, but keep in mind, the public, most of the time, is your friends and family. And the campaign turns into reality if it's sufficiently funded. And the backers get rewarded. Either it's a psychological reward for helping someone out through a crowd gifting campaign, or they get interest if it's a crowd lending campaign, or they get a piece of your business if it's a crowd raise, or they actually get your product or service if it's a crowd selling platform. So what do you have to do in order to engage in crowdfunding campaign? Well, the platforms have different requirements. So you have to determine whether or not your projects, services, products are eligible for the platform that you want to go to. You have to select your strategies associated with the products or services that you want to sell, determine your cultural and personality fit, look for display opportunities, look at the platform costs because the costs vary, and then look at the minor features associated with each platform. So there are some specific platforms. For example, if you're trying to raise money for a creative effort, there's Seed and Spark. They will help you get money for a film project, for example. Kickstarter and Indiegogo are kind of broad categories. Gofundme's broad, BuzzBank, Beacon, Artist Share. These are just 5 out of 2,000. Always check the platform fees, the successes and their reputation before you engage in it. The vast majority of crowdfunding campaigns fail to meet their goals because they set the wrong goals, they select the wrong model, they select the wrong platform, and/or they don't follow an appropriate strategy or tactic, and/or it's just a bad idea or a bad product. No one's interested in pink polka dotted doggy sweaters. Okay. So what's the pros? Well, if you engage in crowdfunding, you're not going to a bank and looking for money. So you don't have to jump through those hoops, right? It validates your idea. You can potentially get a lot of money. You do get some support from these platforms, and it promotes your business. Well, what's the cons? It does take time to prepare for a crowdfunding platform and to follow through on it. You do need to put some money into it. Like you have to have a professional video, professional story drafted. There are significant chances for failure. There's some administrative tasks. Can someone steal your idea? Possibly. But that's why you have a trademark and possibly a patent. And it may not be suitable for all businesses. I'm going to go ahead and continue from here. So there's a step-by-step process. You develop your business idea, goal, product, or service. You choose the site, actually choose the platform, the model, then you choose your site. The crowdfunding site screens for eligibility. You create your crowdfunding business idea goal. You share it with your friends and family and social networks. The supporters pledge funding. The paying closes. Hopefully you reach your goal. You get your funds. The funding platform takes the fee. Always remember that. You complete the campaign. You bring the product to market, and you reward your supporters in some way, shape, or form. Even if it's a donation-based campaign, you want to give them thanks in some way. So what are the elements of a successful crowdfunding campaign? Well, one thing is interesting rewards, effective outreach, sharing the impact with the community, building the community, and developing a story. It's a relatable narrative. It's a story. And there's a tangible theory of change possibly associated with your campaign. So what are the marketing tools? Research. Always determine what is the appropriate model and platform before you jump into these waters, okay? Determine the target market. Not all platforms are appropriate for all services and products. There are niche platforms now just for women. There's something called I Fund Women. And I Find Women now has a platform for minority women only. Identify who you're trying to reach before you jump into this. Determine your strategy, time frame, and costs. Promote it through your social media platforms and your friends and family social media platforms and your professional networks social media platforms. Create the materials. Engage the audience with compelling content, offerings, and story. This is how you might be successful in your crowdfunding campaign. So there's a 360-degree view we have to take of all this. There's all the social media channels. There's probably 10 or so of these social media channels, right? There's a website. You probably need a landing page. You have to engage in SEO, something called mobile marketing, where you have a mobile website, messaging, and apps, and email blasts. And all this ties together. And if you're not doing all of this, the likelihood of meeting your goals is small. So it takes time and effort and energy, but it might be very worthwhile to go through the process. And there are agencies, marketing agencies, that can help you through this. If you're not familiar working with agencies, talk to us. Talk to an SBDC advisor. We can help you out. So it takes about 6 to 8 weeks. Maybe you can shorten that up if you already have videos to launch, and then you launch. Okay. Remember, you're doing promotion before you launch. You're doing promotion during the campaign, and you have to follow up afterwards. So the average campaign is about 9 weeks. You're doing something every day, but it doesn't consume your day. So why go through this? Well, we have a growth rate of almost 12%. In 2027, it's expected to be $26 billion. It just continues to grow and grow and grow and grow. So why not take advantage of it if it's appropriate for you? And here you can see how the numbers are spread out across the world. So the global transaction or value of crowdfunding exceeds $1 billion annually. The US is the largest source of global crowdfunding, okay? I can go over these numbers over and over again, but the point is, you go where the money's at. This is where the money's at. You go after it if it's appropriate for you. Okay. Now, to make a project successful, you have to do certain things. It's called network mapping. 60% of crowdfunding campaigns gain their funds in the first 3 days of the campaign and the last 3 days of the campaign. Because in the first 3 days of the campaign, the push is on with friends and family and professional networks. The last 3 days, you're saying, oh my God, I'm not going to hit my goal. And therefore, you're pushing. Okay. So you have to determine who is your crowd. You make a list of your professional network, your friends and family, because what will happen is they will either support it by actually giving you money. They will ignore you. It happens with my family. Okay. Or they will promote you and give you money, which is best. Okay. One of those 3 things is going to happen. So always push with your friends and family, but don't be obnoxious. Okay. And do it with a team. Trying to do this alone is really hard. Do it with a team. Now, I'm going to stop my share. I don't see any questions yet, so I'll ask. Is there any questions thus far? No, Lauren? I don't hear any questions yet. Okay, so I'm going to go on to the rest of this presentation. Let me share my screen. Lauren, have you contributed to a crowdfunding campaign? Lauren? Actually, why don't you put it in the chat room? Have anyone listening contribute to a crowdfunding campaign? Or if you've engaged in a crowdfunding campaign, why don't you go ahead and put it in the chat room? That'd be interesting. Let's go from here. So I've already been through this. You just saw this chart before, okay? So the companies and the project owners make requests for capital, and then the money is put into the crowdfunding platform, and then it's released to the company owner. Now with Kickstarter, it's an all or nothing platform. That means if you don't hit the goal, you don't get the money. But with Indiegogo, it's a flexible goal. So the question is, why would you do a Kickstarter campaign versus an Indiegogo campaign? Well, the success rate with Kickstarter is higher than Indiegogo, or vice versa. Sorry, it was vice versa from what I remember. It just depends on who your crowd is and where they're at. Now, crowdfunding is part of something called crowdsourcing. There's something called crowdsourcing, which you are using the creativity and the knowledge of the crowd to do something, okay? Crowdfunding is just a subset of that. Keep that in mind. So top reasons to crowdfund: fund your business, validate your idea. It's a proof of concept potentially for investors. Fund an acquisition, launch a product, fund a product, innovative project. You can pay off debt, fund a charity, raise capital for education, fund a city renovation project, support a healthcare project, write a book, support a personal cause. All sorts of reasons you might want to crowdfund. Remember, about 40% is for business-related activities. The rest is non-business-related activities. We all hear about the horrible tragedies that occur where people are raising money for someone who has unfortunately fallen ill or has passed away, and those terrible tragedies, and we support that. But that's not the only thing that's happening in the crowdfunding world. Keep that in mind. I think Mila Kunis has raised millions and millions of dollars for Ukraine, and I applaud her for that. That makes absolute sense. So, platform selection matters, right? You can go to a third-party platform like Kickstarter, Indiegogo, Kiva, etc. Okay, or you can do it on your own and have it up on your own site. The problem is you won't have the number of backers that these platforms have, but you can still do it. There is a fee paid to these platforms. Anyway, but there's a platform fee of 4 to 7%, plus a processing fee of 3 to 5%. But if you do it on your own domain, it's only, the processing fee. The campaign promotional tool, you can integrate for your requirement through your own domain. There's no limitation on the time duration through your own domain, okay? So it's possible to do it, but it's really, really hard. There's a reason why these other platforms exist. I see some comments in the chat room. Bernice, you haven't started one yet. I see that. Lily, you're thinking about it. Susie, yes, but only for individuals. John, for Gofundme. Okay, cool. Got it. Remember, it's also for businesses. So we've been through the transaction value, okay? I don't need to go through these numbers again. Active campaigns as of April 2021. It's film. Film gets a lot of play in these crowdfunding sites. Campaign admins who share the campaign less than twice face a failure rate of 97%. Keep that in mind, 97%. You have to keep pushing. So this is donation-based model, okay? This is the Gofundme, Fundly world, okay? This is cause-related activities. And we certainly should support those causes which are important to us. And here's some of the platforms: Gofundme, Fundly, Fundraiser, Go. There's a number of them. Remember, there's over 2,000 platforms. They all fall into one of these major categories. Nothing is given back to someone who pledges other than a psychological benefit of knowing they've done something good. You could, though. You can go on GoFundMe and give something back to someone who donates money. So it is the largest social fundraising platform, 50 million donors, raised over $9 billion, 70 million users. These numbers are huge, absolutely huge, okay? 120 million donations, daily raises $4 million, used in 19 countries. And you can see how it breaks out: food supplies, hospital fundraising, et cetera. So certainly, this is only going to grow and grow and grow. And for nonprofits, top platforms are Fundly, Gofundme, and actually Kickstarter has a nonprofit section. It's not just for products. Now, this is the crowd selling rewards-based platform. So it's Kickstarter and Indiegogo are the two major ones, but there's a lot more than that. Like I said, students, there are many other niche platforms. You have to do research to find out what they are, okay? The rewards can be non-material. It can be just a credit. You know, we're gonna give you a credit as a funder. It could be a thank you card, a note. The rewards escalate depending on how much is given to you. And you can be very creative with these rewards. So we have Gofundme, Kickstarter, Indiegogo, right? And with Gofundme, the project length is unlimited. Kickstarter, you get 60 days. Indiegogo, you get 60 days. And these are the fees. So Kickstarter has in Indiegogo between 8 and 10%, between 7 and 12% for Indiegogo. But Indiegogo has a flexible goal. It's not an all or nothing platform. So here's some comparisons, okay? All or nothing, Kickstarter, yes. Gofundme, it depends. Indiegogo, no. Here's the costs. What is this best for? For Kickstarter, it's best for creative projects. Gofundme for personal causes, life events, etc. A lot of industries represented in Indiegogo, right? What's the pros to Kickstarter? Pledges to data more than every other crowdfunding combined. Backers on the site are looking for creative projects. What's the pros for Gofundme? There's no deadlines. And it's optimized for sharing. Personal causes are encouraged. For Indiegogo, lots of flexibility, data-driven insights, more liberal project regulations, and it doesn't have that all or nothing requirement. Okay, the cons, well, 8 to 10% fee for Kickstarter, 8 to 10% fee for Indiegogo, all or nothing on Kickstarter, not so for Indiegogo. There's less traffic through Indiegogo. Gofundme, you need a Facebook account, inconsistent customer support, mixed reviews, okay? They all have apps. Kickstarter has a help center. Gofundme has help center, an email submission form, and a 5-minute support guarantee. And Indiegogo has a help center, email submission form, and response within 24 hours. Now there's lending-based platforms, and I'm going to be going over this. In most cases, when it comes to a peer-to-peer lending-based project, you're going to pay an interest rate, okay? That is not true with Kiva. Kiva is a worldwide platform. It's a 0% interest rate. In the United States, you can raise up to $15,000 at no interest. But here are some of the other platforms. Round 4 Funding Circle, Upstart. Here, you're going to be paying an interest if you go with these. Interest is determined by whoever you go with here. Who's funding this? Moms and pops, people like you and me. Now, I Fund Women is specifically associated, has been set up just to crowdfund for women-owned businesses. And it's raised over $60 million. And they recently launched a Latinx Black Women I Fund Women of Color platform. They have an outstanding playbook that anyone can use. They have coaching and mentoring services, networking events. If you're a women-owned business and you're interested in crowdfunding, I would strongly encourage you to check out the I Fund Women site. And even if you're not a woman, get their playbook. It's outstanding. All these platforms have a playbook. So Kiva. Kiva is a micro lending crowdfunding platform. It's spread out all around the world. So there's Kiva Zimbabwe. Here it's called Kiva US. It is a nonprofit. You get up to $15,000 interest-free loan. It is meant for those who have been disenfranchised from traditional lending sources or do not qualify for a loan. They're funded over $1.6 billion in loans, 96% repayment rate, which is amazing. They have over 1.9 million lenders, and they're in 77 countries. People like you and me can lend as little as $25 to a campaign. The qualification is not based upon your credit or your collateral, any of that stuff, employment history, no. The only thing that counts is if you have a business, you can prove it's a valid business, and you have social proof. Social proof means that you can you get at least 10 friends or family members to loan you $25 and go on a national platform. It's called Kiva US. It's an outstanding platform, especially for those who are just starting out with their businesses. Now, this one's interesting. Equity-based crowdfunding. This is for businesses that are a little bit more mature. They have traction, they're making sales, etc. This came about because the Jobs Act. Under Obama, Regulation CF was adopted. What that allowed was the Democrat it allowed moms and pop to go ahead and put money into private businesses, which they weren't able to do previously. Previously, if you wanted to invest in a business, let's do a friend or family, your own business, you had to go to a broker and buy stocks and bonds. What this regulation did, it allowed for basically organizations to create a platform online. They're still brokers. They're still registered with the SEC. Okay, they're FINRA regulated. You can go ahead and raise money by selling a piece of your business through these platforms, and you can set the threshold. It can be as little as $100. So if you want to raise $100,000 and you set the threshold to $100, you need a lot more investors. Or if you set it to $1,000, then you need 1,000 investors. Now, what happens is there's only one line on the cap table, so you don't have to worry about handling all those investors. And they don't take board seats. VCs take board seats. What happens with VCs, within 5 years, founders are bounced because they lose board seats. That doesn't happen with an equity raise, a crowdfunding equity raise. It's actually done through let's call it a safe note, a simple agreement for future equity. I don't want to get into these details, but the bottom line is, in some ways, this is a better way to go than through a VC, and you're more likely to be accepted than trying to get into a VC. Now, that doesn't mean you will be, because there's still vetting that occurs at these sites. Start Engine charges $10,000 to have the paperwork prepared. You have to prepare legal paperwork, whether you have it done by your own attorney or done by the platform. So keep in mind, there's always money involved in these crowdfunding campaigns. Yeah, equity-based crowdfunding or crowd raises, that's what it's called, okay? And here's a whole list of them, and many more coming online, okay? So if you're gonna do this, you find the platform that makes sense for you, because different platforms like different types of businesses. And they're all registered, they're brokers with the SEC, okay? Now, if you go into equity crowdfunding, there you get money. If you have limited assets or collateral, you get money. It can be done for pre-revenue startups, although that's really hard. Okay, usually you want some sort of traction, because keep in mind, it's the moms and pops of the world that are going in and investing in these businesses, and moms and pops want to see something back for the money, and they're not going to get it back anytime soon. It takes a while. Okay. You can use proceeds to acquire another business or company. It's not like you're going to go and buy a stock and then sell it in a month. It doesn't work that way. This is a long-term investment. If someone's going to engage in it, or if you're going to do it, remember, it's a long-term investment for those people investing in a business. You can close the gap from proving a business concept to getting VC or private equity money. I know there's funding for underserved markets such as female and minority-owned businesses. And you can build a community of investors who might start off with a small amount of money and then grow. But there are been a lot of success stories through these crowd raises. Now, I'm done talking about the platforms. Now we're going to move into tax.
Hey, Mike, you there? Oh, okay. Thanks, Norma. I wasn't sure if it was just on my end. I am pretty sure Mike is going to log back on as soon as he can. So please just give us a couple of minutes. Thank you. Thanks for your patience. I'm sorry, everyone. Let's give it just a couple of more minutes and see if Mike's able. Oh, there he is.
Hello, can you hear me?
Yes, we can hear you just fine.
Sorry, Lauren, I apologize. I lost the Wi-Fi connection here.
Oh, no worries.
So what I would like to do is continue this next week.
Okay.
Is that okay with you?
Yes.
Okay with everybody else? And I sincerely apologize to everybody who's listening to me. Sometimes we just have technical problems, and I can't solve that at this minute.
No worries. Thank you, Mike. Sorry about that.
Okay, so hopefully people got something out of this. And yes, we will continue this discussion next week. Thank you so much for your time.
Okay, beautiful. Thank you, Mike. Take care. We'll see you next week.
All right, bye now.
Bye. Thank you, everyone, for tuning in. So sorry about that. Please do be sure to tune in next week, and Mike will continue the presentation. Have a wonderful rest of the week, and we will see you next Thursday at 1 p.m. Thank you. Bye.